look at the average Australian investor, diversification is certainly something we are not reaching. It means that you need to look at domestic equities, international equities, fixed income, cash, property, and everything in between. If we have a look at that particularly, the one thing that we are really bad at is actually getting exposure internationally. And that's unfortunate considering that international investment in the post-GFC world has well and truly outstripped our local Bursa. It's not unsurprising, our market is more of an income market rather than growth. But in saying that, it means that the average investor has missed out on the upside. So how do we get better exposure to international markets? The old way of getting involved in international markets was quite convoluted. You have high amount of administration and tax issues. You just have to look at the US and their W8 Ben form, look into Europe and around the issues around their new changes and regulations. Then you've got things like currency. Are you transacting in the yen, the pound, the euro, the US dollar, the Canadian dollar? All of those things therefore make it quite convoluted and can be quite expensive. So it makes sense that we have, as a nation, unfortunately stayed away from markets that have been incredibly robust since the post-GFC world. However, thankfully over the last 15 to 20 years, ETFs have certainly become quite prominent and they now offer you that opportunity into the international market much more efficiently than once upon a time. Things around administration, regulation, currency, etc. are now all wrapped up inside ETFs. So your ability to get exposure to the S&P or to the Stock 600 or the FTSE or the Nikkei, etc. are now much more accessible. Currency issues are no longer a problem, as that most of these ETFs are transacted in the local currency of Aussie dollar and on the ASX, which means you can get access to it on a very, very constant basis when the ASX is open. But again, that brings us back to the point of how do you actually get the diversification across the regions and the correct rating and also the optimal return? To give you the best optimal weighting to each region and correctly for the best possible return, we follow our peers, and that's what we do, and that's why our international portfolio is so successful in the current market. It is done cheaply, efficiently, and to the optimal level.